Hello everyone, welcome to the Smart Market Insights here on Kalkine TV. I'm Sage. Today we'll be shining some light on why 2021 was a tough ride for the BNPL stocks. And after an immensely successful journey initially during the pandemic, BNPL, or buy now, pay later, stocks were seen to be losing investors' interest this year. And the BNPL stocks saw a large fan base develop in Australia in 2020, where investors invested heavily in such companies. Much of the investor confidence in these stocks came from their stellar financial performance, owing to the large demand for digital services. And the unique buy now, pay later segment emerged as a rescuer for customers who lost their jobs or received pay cuts due to the pandemic. Fast forward now to the end of 2021 and the BNPL stocks seem to have lost their charm. For the uninitiated, BNPL companies provide an instalment-based payment method to consumers for discretionary products. The attractive feature of these instalments is that they do not typically come with an interest payment, making them different from the usual definition of a loan. However, a late fee may be charged in special circumstances, and with consumerism at its peak in the modern age of online retail, BNPL companies were an instant hit during the pandemic-induced economic slump. However, economic recovery has not been so helpful for the BNPL sector, as demand for these services has plunged drastically, and ultimately investors holding shares in these companies have seen their investments going for a toss as 2021 ends. So, what went wrong? The BNPL players Afterpay, Split Payments and Zipco started the year in high spirits and continued to rule the ASX charts throughout the beginning of 2021. Various other BNPL stocks saw their heyday in early 2021, with high investor confidence pushing up their stock price. And the BNPL was hailed as a new line of credit before the sector saw many companies hopping on the trend. However, the BNPL stocks lost some momentum after mid-February of 2021, leading to negative returns in 2021. And at present, the sector is marked with rising competition in the form of newly formed BNPL segments of some premier banking institutions. Now, financing giants such as the Commonwealth Bank and PayPal have launched their BNPL services this year and are adding to the increased intra-industry competition in the segment. And amidst this, companies in the BNPL industry are at risk of observing low profitability. So are the regulatory pressures building up? The BNPL stocks have long been raising eyebrows due to underlying regulatory concerns that could worsen if consumers increase spending beyond their budgets. And as per the Australian Securities and Investments Commission, consumers might face greater financial risks by repeatedly availing these lending services. A recent report from the Reserve Bank of Australia highlighted the importance of removing restrictions on merchants that barred them from charging customers for the surcharge the merchants themselves must pay. However, a firmer stance on this is yet to be taken, and the regulatory crackdown on the BNPL companies could soon be seen in the form of increased scrutiny on the BNPL players. Treasurer Josh Frydenberg recently announced a comprehensive plan to limit undisciplined practices in the buy now, pay later space. And the said reform could arise in the form of increased checks on the creditworthiness of customers and enforcement of controls to ensure customers don't end up in deep water. So the bottom line, most BNPL companies enjoyed their glory days in the market prior to the pandemic-induced slowdown. However, as competition increases, only those companies would be able to thrive that constantly reinvent themselves and procure a loyal customer base under the changing regulatory environment. And thank you for your company on that one. But that's all for now. And we'll be back again with the exclusive Hot Performers show. Till then, keep watching Kalkine TV for the latest market updates and related insights. Sage here, signing off for now.